Sean and Kelly here, Price and Price Group of Sampson Properties, and what are we talking about today?
We're talking about perception versus reality. Are realtors overpaid?
Ooh, it's gonna be good.
Ooh. So right out of the gate,
Yes.
Sean said, let's talk about the big elephant in the room.
Yeah, because what does everybody think that a realtor is? Nothing but a door opener.
Yeah, what even is that? Like you know what, that would be like an Uber driver that just like has a license with keys and everything.
Yeah, it's just kind of like that. So they go on Zillow, they see a property, they have to call somebody to open the door for them.
They click a button and then there's the door opener.
Yeah,
okay, that makes sense. I'd like pay like $15 for that.
You'd
per
pay
door open. I'd pay, if it was a house I really, really wanted, I might pay $25 for someone to open the door for me.
Interesting. Okay.
So if that's what you're thinking, then realtors are very, very much over.
That's right. That's right. And
let's talk about what our role really is, right?
To that point, we do not get paid to open doors. To be very clear. Okay. All right. So, what is a realtor? What does a realtor do? Why are they not just door openers?
Okay. Well, I mean, I think we're going to go into everything that goes into actually getting a real estate license,
Yes.
but for me, I think it comes down to the whole fiduciary duty, right?
Mm-hmm.
Like what we owe our clients, because it's not a person or a professional and a customer. It's an agent and a client.
That's
so
right. Yeah.
I think we've talked about this before, but if you'll explain.
Yeah. So a fiduciary has the responsibility to look out for the client's best interest, whether it's the buyer or the seller. That relationship is established when the buyer-broker agreement or the listing agreement is signed. Mm-hmm. And when you're working with an agent, there are agents that are just door openers. There are agents that are not professional at this. They just got their license as a hobby,
Yes.
So that does happen. Those are agents that can cause a lot of risk for a buyer or a seller because they could lose a lot of money.
Those are the ones that are like, I'll do it for 1%.
That's right.
Or I'll do it for a flat fee.
That's right.
Like, oh, okay, you're gonna be fun.
Yeah. So that fiduciary responsibility is what's important because it's our job to look out for your best interest and protect you in the situation.
Yeah.
The challenge with real estate is the barrier to entry. We're going to go into what it takes to get a license, briefly. But the barrier to entry is actually quite low for the responsibility that comes with this job.
That's true. And, I don't think it does much service for the point that we're going to prove to you guys by the end of this when we see post after post of real estate agents, and we've done it as well, right? Because we are not social media people. So it's like, well, we got to put something out there, and we put the posts that say like, hey, sold in 3 days, or sold like off market with 12 offers, right? And it's like we kind of make the process feel really, really simple and like it really only took nothing. Yeah. And so I think that we've kind of shot ourselves in the foot with posts like that. So, but more on that, right?
Yeah, definitely. But that's a really good point. That public, we're creating the perception.
Yes, that's exactly right.
We being realtors, not we being us.
We have done it in the past, but like I said, because you can check out our feeds and you'll see us everywhere, right? But not a lot. Like we don't really know what we're doing. We're not cool like that. But okay, so let's talk about education. You referenced like what were your brilliant words and how you put it, like how to get in the door?
The barrier to entry. So how do you actually get a real estate license? What does it take to do that?
Okay, so we're going to talk specifically about the DMV, but it's pretty much very, very similar across the U.S., right? So every state or territory, is it territory?
State
or district or whatever?
Yes.
Well, DC's not a state.
That's true, yeah.
I always try to,
Every
Commonwealth
jurisdiction.
We all have pre-licensing requirements, which is going to be pre-licensing education. We all have to sit for the exams. It's national and jurisdiction, right? State, whatever. We all have to pass background checks in each one of those. Like even if, like say here we're licensed in all three, the DMV, DC, Virginia, and Maryland, and Florida. So it's not just one background check and they communicate that to each of the other jurisdictions. No, we've had our fingerprints taken multiple times. Like we're super, and that's one thing you really need to know is if you're working with a licensed realtor, you're kind of pretty much guaranteed to be safe unless they've gone off the deep end for some
As
weird
far as
reason.
like
as far as like
fit,
criminal
yes,
backgrounds
that's right.
and all that kind of stuff.
Yeah.
Like we go through a lot of checks there.
And a little side note here with the states not talking to each other.
Yeah.
Even the commissions inside of the state. So for example, I've got a license in chiropractic because I maintain that license, just keep it active.
Right.
I got fingerprinted for that here in Virginia, just like I did within a month of getting fingerprinted
Yeah.
for my real estate license, because
And in Florida, right?
Yeah, and in Florida, yeah.
Yeah.
So
So
it's,
your fingerprints are everywhere. He's
Yeah.
not going to commit any crimes. Do
cannot-
not worry
yeah,
about it.
hard
If you
these
ever
things
see
off.
him with gloves, well, no, it's we have winter here, so I'm not going to say what I was going to say. But there is, okay, so I talked about education, the boards and all that. There are continuing education that each of the jurisdictions have to maintain. Sometimes it's every year, every 2 years. Virginia is kind of strict on, there's another 30-hour licensing course, like in the immediate
yeah, it's
time
called
right
post-licensing,
after
yeah.
the pre-license in Florida is like that as well. But here's something interesting. So the exam pass rates, is you have to sit for the national for everybody, and then there's a national board, and then there's a state board for each of the jurisdictions. And the pass rate for DC is between 50 and 60% on their first time. So these
Yeah.
are not easy pass exams. It's not like getting the things that are easy. I was
Yep.
gonna say something, but then I'm like, do you get canceled for saying things like that? Like, I got my.
I don't know, you might. We're getting
Because
canceled. It doesn't matter if we're canceled.
Well,
Nobody
that's
sees
true.
us
I
anyway.
lost 2. Okay. Maryland, it's a 60 to 65% pass rate the first time. Virginia, 60 to 70%, which I could see that. But here's a fun fact. The Florida real estate exam is the second most difficult exam to pass in the country. Only, I think California is more difficult,
Okay.
right? And guess who passed it on their first try?
Double fun fact. I passed it on my first try. She's passed it on her first try twice.
That's true. Okay,
Yeah.
so I got
she
it.
got it, and then she let it
I
lapse.
got it in 2012, and then we started our other business,
Yes,
and
yep.
and so I was like, this other business is great. I don't think I'm going to go back into real estate. I should have known better because
Yeah.
I've always loved real estate, and so I passed it.
And that
Again.
in all seriousness, that was quite a task because that is a hard test.
Yeah.
I took 4 national boards plus a state exam for chiropractic. The real estate test was by far
It's hard,
harder. It's
right,
a hard
guys?
test.
It's not easy.
It's not easy.
But
But you're just
it
brilliant.
looks easy when you see.
Yeah. Well, that's
Okay.
the first time. People take this thing over and over again. We've met agents that have taken it 7, 8 times. By
There's
that
a
point,
max
you know-
number, like you can take it this many times in a certain time period.
Yep,
Blah blah
yep.
blah.
Okay. Okay. So we say all that for
Yes.
this reason. The barrier to entry is low. Comparatively, like if you were doing some other profession where you earn the kind of money that a realtor can make, and we'll see if they actually do make
Right.
that kind of money. But so the barrier to entry
What
can
it
be
looks
like
like
low.
they make.
Yeah,
Mhm.
can be kind of low, but the maintenance of that is hard. So the statistics for real estate is 75% of realtors fail within the first year. 84% have failed within the first 5 years.
Yeah.
The determination of if somebody has failed is when they turn their license in. Turning your license in is when you get to these points of
Expiration.
CEUs and expirations and re-upping your memberships
Right.
where the expenses, people just don't renew.
Yeah.
That's how that failure rate is figured.
And I think I think that's even a generous number because you have
Yeah.
so many who do it part-time. So they make just enough money at their other jobs and this one to be like, I'm going to keep it active for
Yeah.
another year,
Yeah.
or they're doing it. And, there are times that I think this is like really smart and I think, why don't we do that? Where their spouse or their life partner has like a job,
Yeah,
right? That's
yeah.
making regular income and it can supplement when the real estate market kind of tanks and
Yes.
doesn't get too fun.
Yep.
So a day in the life, right? So
Okay.
let's talk about the time, commitment, and all of that kind of
Yeah.
stuff.
So this is where, okay, so you think that, hey, a house sold in 3 days. That's fantastic for
Yay.
$50,000 above asking price. Why do you need a realtor? Well, these are the facts, okay? I ran the numbers, I keep our stats.
Oh, stat man.
I have how many hours we have worked this year.
Of course you do.
So we worked a year, in this year, 3,450 hours,
Yeah.
65 hours a week.
Yeah.
what does that consist of? Okay, so here's the deal. We did 19 transactions. The average real estate agent does 2 transactions a year. Most real estate agents do less than that. So that's just an average. We did 19 transactions. So that translates into 181 and a half hours of us working for one transaction.
Per deal, right?
Yeah, for one transaction. We only get paid on when we close a deal. So all the work, if we didn't close a deal, we wouldn't get paid. So 181 hours for that. So what does that entail? What is going on? Well, that's Kelly working on the contract behind the scenes. That's we made 20,133 calls, texts, and emails. That's not even including that's not including the deal, the transaction emails and contacts and everything. That's just
because keep in mind, you're always calling for sellers. You're always calling buyers. You know, not just the ones who walk in. You know, and then for buyers, you're always calling sellers and their ideal property. I mean, it's like it's a lot.
That's exactly it. So it's that time of getting these transactions to happen. 4,278 conversations is what we had.
We as in you. I maybe had 2.
We showed 173 homes, and we held 76 open houses.
Yeah.
So that's
and open houses are like 2 to 4 hours long.
That's
a
right.
Piece. And let me talk. Are you done with your numbers? Because I want to go.
Go.
Oh, okay, of course you're not. Okay.
So the important thing to understand here is that when you're working with an agent that is actually doing this full time, this is not a 40-hour week structured job. We actually had to start forcing trying to take a day off a week. And it still is never a full day off, but it's like at least like a half a day that we get off. So,
my turn?
Yes.
Okay, talking about the time, right? This is one of the things I have such a soft spot in my heart for agents who don't do this with their significant other. I mean, if you're on a team, whatever, you've got all that. But for us, being able to do this with children at home, if only one of us did this, and let's say I had like a normal job and he was doing this, then all the, you say 20 hours, but all those times that I'm doing contracts and everything, it's kind of a handoff. You're downstairs playing ping pong or shooting pool or taking kids to jujitsu and, you know, and all that kind of stuff. And then when he's busy doing the open houses and doing all the stuff that he's doing, then I get to be parent. So our kids, for us, this was very important that we made sure they always had a parent available at home.
That's right.
So those of you agents who are doing it on your own, it's like, because with kids at home, it's just tough, and we never have to go home and wonder, gee, why is he in such a bad mood? You know, I don't get it. It's like, no, I absolutely get it. I know everything that's going on, and we get to be each other's support. So any of you realtors out there who want to learn what it's like to be a husband and wife team in this business, because I tell you, when you're a husband and wife team, 1 + 1 does not equal 2, my friends, it equals 10, and that's why you're going to get the numbers that we get. So, next page.
High five. And we do meet with a lot of realtors to help them set up the husband-wife thing, just to...
Well, we do.
Yeah, we do.
That's why I thought, why not just say it? We'll help you.
Yeah. So the big thing about this is just to understand that it's not just the work that the public sees. In fact, they see the minutia, a very, very small tip of the iceberg.
Look how... Well, I'm not so fancy.
Well, this is what happens. So they call there's a thing in our industry where agents come in thinking that this is like selling Sunset or selling Manhattan or something,
right.
where you get to come in, you get to dress up, you get to look at nice houses and make a ton of money.
Yeah.
They don't know the grind. That's why so many people fail, because as soon as you get that license, you don't have people calling you. You got to go find them. So it is a grind.
Well, and let me hit back on that. So I love dressing up when it's time to dress up. But one of the things that I'm like, I always loved real estate, right? When we met when I was 19 years old. But I was like, I just don't want to be one of those ladies wearing realtor necklaces. It took you like a year to say you don't have to wear realtor necklaces to be a realtor. So that's another.
All right, so getting back into it. If I ever catch you wearing a realtor necklace.
Just don't get me one for Christmas. Oh, sorry.
Oh, yeah, good. That's gonna be hilarious.
I'm gonna wear it as a tiara, like one of those cute things.
That's right. Okay, so the lawyer-judge analogy. Somebody said this to us the other day, and this is really a good analogy.
It made sense. Okay, so we've heard it a couple of times now.
We are not lawyers, just to be clear.
Or judges.
Yes. Okay.
But we heard a really good explanation for what the real estate agent role is like, right? And they said it's kind of like a client who hires a lawyer, their attorney, and they have to disclose everything, right? Like they tell them everything, all the nitty-gritty details, because that way they trust that the attorney will present everything as it needs to the judge, jury, right? To get the outcome that the client wants, right? And so that's what, in a big way, the real estate agent, especially when we're working with a lender as well, is it's like, we're kind of the attorneys. You have to disclose everything to us because we know how to present your situation in the very best light while maintaining all the rules and guidelines, ethics and laws, so that you don't get in trouble, to present exactly what we can present to make you look the best, to get you the house you want or the investment property, whatever it is that you want.
That's on the buy side. And on the sell side, to present your property, your product to the public in the way that's going to attract most people.
Yes, because there are a whole lot of ethical things that can get in the way of that too. And I mean, all you have to do is look at like the FSBOs, the for sale by owners, and it's like, oh my God, they cannot say that.
Correction.
Not okay.
So there's the negotiation side of it, and that fiduciary, like we talked about.
Yes, there's the emotional weight.
Emotional,
oh my gosh.
Yeah.
Shall I?
Yes, because you're the emotion.
So, you know, I know that some people think that real estate agents are in it for the money, right? And I gotta tell you, hell no. Because buying a home isn't always, and those of you who are in this situation that I'm about to talk about, you know, it's not always a great thing. It's not always, oh, we want to buy our perfect starter home, or we're adding to our family, we need the bigger home to move up. Some people, it's not a good situation, right?
It could be a divorce, it could be a death, a loss of a job, it could be these emotional, really bad times.
Sometimes it's, you know, the elderly people are, you know, their kids want them to sell because they've got to go into a different living situation that they don't want to go into.
I've got a great actual example. There was a house, a seller that we were talking to try to help them with their situation because they were about to lose their house. And one of the things that they told me in the consultation when I was talking to them was that they were working with a previous realtor, that when they got an offer, this offer came in on this property, and when the realtor presented the offer to him, the realtor said, "Congratulations, you have an offer." And it was a family home. The husband had died, the daughter, all the grandkids were living in the house, and it broke their heart when they actually got that offer. So when the realtor said congratulations, that was not, and that ended that relationship because they felt like that person didn't have their emotion.
Like you don't understand, right? What's going on?
Like I said, the emotional one. So anytime we have an emotional situation, I consult with.
There's an emotional weight that goes into this, and sometimes it's wonderful, and sometimes it is not wonderful. It's heartbreaking. You talk about financial weight while I compose myself.
So as a realtor, and this is something that's really, really important for people to understand. You know, we'll talk to some sellers who are like, oh yeah, my niece just got her license, she's going to sell the house for us, or my nephew just got his license, he's going to help us buy this house.
Especially if it's like $1.5 million.
Yeah, you are making a large investment in a large asset, or you're trying to sell a large asset, and the potential for losing large sums of money is very significant and real. And if you're using somebody who does not know what they're doing and how to do it and does not have experience, then you're putting a lot of money at risk.
And we're never going to say don't throw your friend or your family member a bone. Absolutely do, but connect them with an agent that you trust. Who's gonna say, hey, let's do this together, right? Let me show you the ropes and show you how to do this, and it's gonna they'll learn a whole lot more. It's gonna be better to do it that way.
Absolutely. Okay, so
cost of doing business, talking about finances.
Yeah, so we already talked about the cost of a transaction for us this last year was 181.57 hours. But there's other costs. You know, time is the most precious asset, so we spend a lot of time with this, but there's other costs. There's our brokerage fees.
Okay, so let me explain that. Every agent has to have their license hung under a brokerage, right? An umbrella top boss broker.
So you have to have that license with them. So you have fees with that. The broker has to survive. We have commission splits. So there's a difference between compensation and commission. Commission is what our broker pays to us. And that's an agreement that every agent has with their brokerages. Some are set, some are negotiated. It varies on every brokerage.
Varies per brokerage and per agent with their broker, right? It's not always the same.
So that's the commission. compensation is what the client pays to the brokerage. So
Yeah.
you're never paying an agent directly. It always goes to the
Yeah.
brokerage first, and then they pay the agent
Yeah.
based on their commission.
There've been
agreement.
a lot in the news last year about the whole commission splits
Yeah.
and should it be advertised and shouldn't it be and all that. That's the number that went to the big
brokerage.
honcho brokerage.
Yeah.
That wasn't like what trickled down and went to that agent
That's
that
right.
was on that transaction.
That's right. So you don't know what the commission split is.
Yeah.
And then for that agent, then that agent has to cover all their marketing expenses,
Yeah.
everything they pay to market for your property, just for their business in
offices,
general,
yeah.
their offices, the
Think about it.
transportation costs.
Oh my
are
gosh.
ridiculous.
I don't even know, and I'm sure there are a lot of you out there. If you have an electric vehicle and you're a real estate agent, like a buyer's agent showing properties, please let me know. But I don't know of any who have electric vehicles,
Yeah,
EVs.
I like EVs.
EVs.
Yeah, because
Because
there's range
there's-
anxiety.
Heck yeah,
Yeah.
man! I would not be able to cope. You never know where your buyers are going to want to take you, and you just
Yeah.
don't know. And I have a diesel.
Yeah, that's right. That's right. Well, and on top of that, we've got the vehicle maintenance.
Yes.
We were spending.
I don't want to.
Sometimes over $600 to $700 a month just on tolls. Just
And
going-
tolls. I don't know what you said, but did you factor tolls in there?
No, I haven't mentioned anything about tolls.
The tolls.
So there's a lot of expense that comes into this.
Yes.
CEUs, all those classes we have to pay
Yeah.
for them. And then association dues. Every association, we're both licensed in multiple jurisdictions. We have to pay association dues. We have
For
to
each
pay
one.
MLS access
Yeah.
for each, well, this one shares one MLS, but Florida has a different
Yeah.
one. So there's all kinds of different
Yeah.
fees and expenses.
That's true.
So realtors have overhead as well. It's not just a straight, this is
And when
what
we're
you get.
listing your house, I mean, not everybody does all of this, but the staging consultations, we pay for that. The photography, we pay for that. We
Yeah.
don't go shooting with our phones.
We pay for the professional cleanings. We pay for
Yes.
So
Oftentimes
there.
home warranties. We give our sellers a home warranty during the selling phase,
Process, yep.
the listing phase. Okay,
That's
yada
right.
yada yada. We're
So
awesome.
so again, it looks like it's just all this money, but there's so much time behind it, and there's so many expenses that come out of it.
Do I dress like we make too much?
We totally dress like that. Like we are so New York.
Like, look. Okay.
Okay. What's next?
Lastly, so I think we nailed it.
Nailed it. Yeah. So the question to everybody watching this,
Yeah.
and put this in the comments: do you think realtors are worth what
Do
they
you
earn?
agree or disagree with us?
Yes. Do you agree that they earn that money?
Yeah,
I
wanna
really
know.
hope they do. If they don't, we're gonna have to redo this video with
If they
more
say-
proof. I got more stats.
You got a lot of mo.
Yeah, you made me edit this down.
Okay, so in closing, our mission
Yes.
is to help you make whatever your real estate dreams are come true. So
That's
if
right.
you know of anyone who needs to buy, sell, or invest in real estate, get in touch with us.
Yeah.
Sean and Kelly Price, where dreams find a home at
703-424-5873. You can find us on YouTube. I think it's the Price and Price group on the YouTube
You
channel.
can find us on all the socials. Just don't expect us to be like
Yeah, we're not gonna be all.
doing things that are like fun. Because,
But
okay,
you'll
let me
see
just
that
say
you'll see
too,
that we're real.
we have 4 kids and they're all amazing and all so very different and like the most glorious thing in my life, and none of them will let their pictures be taken
Yeah.
or let any videos. So I see all these other people with all their kids and their kids are
Yep.
so and I'm like, they don't play right. They don't do that. So we're some version of Price and Price Realtors, Sean and Kelly.
Price group.
Price and Price group,
Yeah.
yeah. Where dreams find a home.
Yeah.
And like and subscribe so
Yeah,
we
please.
look as cool as all the other cool
Please
kids.
subscribe, especially if you're on YouTube. Let's get subscribers going here. Okay.
Bye.
All right. Thanks, guys.
Hey everybody,
Sean and Kelly here, Price Group of Samson Properties, and what's this?
it's time for our market snapshot. That's right, everybody.
Dang,
That's
you got
what's
that.
going on in the Northern Virginia real estate market in the last 7 days in 5 minutes or less.
Very good. All right, here we go. Damn.
On fire.
Fuego.
Okay.
Okay. So what's going on?
So the squiggly black line there, that's the buyer activity. That is how many houses have gone under contract in the last 7 days. And the blue line that's up and down under there, that's the seller activity. That's how many houses have come on the market for sale in the last 7 days.
That is correct. Okay. So as we said last week, we had a large increase in inventory. So we expected the buyer activity to continue to increase.
That we
And the inventory actually decreased a little bit this week compared
Did you
to last
expect
week.
that?
You
I
know,
thought it was going to go up again.
well, here's the thing. We're trending up, and I expect it to trend up, but you can't look at the.
But that's just how my mind looks at it.
Okay.
A
So
moment is everything.
I am
Everything is a moment.
I would have been surprised if it spiked up yet again.
You would?
Yeah. I figured it would do some kind of this, and then next week it'll go up again, but it's going to keep on trending in an upward direction.
That's why you get paid the big bucks.
That's right. That's right.
Okay.
Even if you look over here, see how it was never just like a straight up line. You know, you might have 2 weeks in a row here, but it was pretty much just like a trend.
I thought we were going to do what we did in the summer because I'm
that's
so
right.
smart.
That
No,
one
I
right
did not
there.
think that. Okay, fair. I'm
okay.
just adding way too much commentary and making myself look like an idiot.
So I've been leaving that in here.
Don't leave that.
So inventory is certainly on the rise for the last 4 weeks, and buyer activity is following it. So we might see a bit of a dip in buyer activity next week just because inventory went down this week, or it could flatten, or it could go up a little bit. Talk about hedging your
Wow.
bets. But here's what I kind of predict. I kind of predict flat or up just a little bit because we had a large increase in inventory here, and our increase in buyer activity didn't match it. So I think that
Yeah.
we'll still have a little bit of an up. I don't think it'll come down.
I think it's the whole administration holdup, right?
Could be.
And like a lot of people here in our area wondering, what about my job, and what about having to go back to the office, and just what about a bunch of stuff.
Yeah, you're right. The important thing to understand right now is that as of this point right here, which was January 1st, everything is trending up. So the market is starting to pick up. We're getting into our spring market. Spring market is no longer spring, it's now winter, but it's starting to pick up again.
Yeah.
Buyers, it's still a decent time for you to get out there. Some properties are going with just single offers, some are going with multiple offers.
Some
sellers,
even have contingencies
yeah, some
that are
have some
being accepted,
contingencies.
some are not.
That's right. About what was it? About 50% were getting
We're
inspected.
saying a whole lot.
We were
these
just
days.
right
We're
there.
Like, some are.
We're a whole lot of nothing. But it's an opportune time if you're going to buy in the next 3 to 6 months to go ahead and consider buying now. Sellers, the buyers are there, the properties are moving as long as you price it competitively for the condition. But the key to this is that right now the inventory is starting to increase, and here in a couple months there's going to be a lot more inventory.
But if you're gonna have to buy here again, sellers, sell now.
Yeah.
Because what you're gonna buy is gonna be more expensive later. If you're not gonna buy here or even rent here, then I would say consider waiting until the spring market. Because yeah, I definitely would. Because then you will have more buyers, those who don't listen to us.
Yeah, but you're gonna have more inventory too. I think
You're
it's
gonna
hit or
have more
miss.
inventory, but because you're gonna sell with us, we're gonna make sure it's staged perfectly.
Bet.
And when you do that, you are going to have the property that has multiple listings, and you're going to end up with an offer with no contingencies at top dollar, more than we listed it for, and everything else. It's going to be awesome. So if you are not going to buy here, then wait till spring. List with us, and we've got you. We pay for all of it.
Okay.
I'm just saying.
All right.
We're that good.
Yeah. Listen to the stat master.
I'm not the stat master, but I'll stage it like a mofo.
You are the stage master. All right, so what does this mean with strength of the seller's market? Coming down here into the normal market, which is this light gray line here. Last week we dipped down into a little bit of a below the normal market, but again, we're stepping right back up into it. So we're trending upwards. I think this will continue to trend upwards. And you know, Kelly brings up a good point, because when you get into the spring market right here, February, March, that's usually when we're up in the highest part of the seller's market. But you're not going to lose now either. So
you're not. Yeah. Sellers are going to continue to call the shots around here, I think, for
a while. Yeah, absolutely. All right. Please like and subscribe.
Like and subscribe, because we need to look like the cool kids too.
Yeah, we have friends.
We're in the room with them, and everybody else has like all these followers and stuff, and
Do you remember the story? And she was like, you know, I only got 2,500 views on this one, and then the really bad one I got 500,000 views.
And I'm kind of like, I wanted to do this, and it's like we're with the top producer masterminds, and I'm like, can we move to the bathroom?
So we're really good at real estate, but we're not really good at social media. But anyway, please like us and subscribe to us, or whatever you have to do on this platform. And we'll see you next week. If you have any questions, or if you're thinking about buying or selling in this market, let's have a one-on-one conversation, figure out your goals, figure out what the best strategy is for you.
Your specific needs, right? Because our mission is making sure your dreams find their home.
That's right. All right, we'll see you next week.
Bye. Hey everybody, it's time for our Mortgage Minute with Tatiana Ipliva Lopez from Prosperity Home Mortgage. Hello.
Hey, Tatiana.
Hi guys, how you doing?
All right. Good hat, bad hat, naughty hat, nice hat. What you got?
No hat.
No hat.
No
It got,
hat with maybe a little bit of a small, nice hat.
didn't it
Kind of
get
a
a,
little hat. I'm gonna say, you know what? I'm gonna get you some little hat props of various sizes, like from little tiny toy hats all the way up to like leprechaun and everything, and then a big sombrero.
yes, that'd be great.
That's what I'm gonna
I
get.
have
Didn't
sombrero.
we have an up and down this week? Like, wasn't it up for a little bit and then it came back down when the reports
Yeah,
came out?
yeah, they are improving slightly. I think it's in
Okay.
I guess we're just waiting for inauguration. I don't know. So they're improving a little bit right now. That's why I
Okay.
said maybe no hat or very small, nice hat.
Okay. I
So
do think, yeah.
let's take a look.
Okay.
We have new charts today for something new for you guys. It's 30-year average rate chart that goes back all the way to 1972 and right now 2025 with the breakdown of rates right here. So average rate is around 7.04. Last week it was actually 7.11, if you remember.
Yeah.
So there is some improvement, but in general, they did stay flat, with slight improvement right now in the past 1-2 days. Several factors have driven rates up this winter, strong economic data, lowering expectations for the Fed to cut the rates again. And it caused 10-year treasury yield. That's the key benchmark for the home loan rates. That's what we look at, 10-year treasury yield. So that went up. And they're concerned that Donald Trump's the incoming administration will stroke inflation and boost government debt deficit. That all rattled the mortgage market. So we'll see what happens.
Yeah.
Now, I was looking at predictions. If probably in the beginning of last quarter, everyone was optimistic, saying that rates are going to be in fives. Then it started climbing up to in six. Now it's in the high six. So we'll see what happens.
Yeah.
I thought that was a load of hooey when they were saying that. Like I didn't buy it for a second because I keep saying I think the feds have been like for the past year and a half have been dangling this we're gonna lower interest rates in front of everybody and it's not doing anybody any favors.
Yeah.
That's true. Yeah.
Except for the fact we have no inventory. So
That's true. Yeah.
I say a lot of true things.
Nothing's doing anybody any favors right now. And there are some ways that people can get their rates down, like buying points and different things like that. But one of the best ways to get your rates down is your credit score and making sure you have that optimal credit score. So you just did a class recently on credit scores. So can you give us like a quick rundown of what buyers can do to really optimize their credit score when they're getting ready to buy a house?
Yes, so it's true. The credit score is one of the main factors that it increases or lowers your interest rate, right? So that's why this average rate, that's for taking in consideration higher credit score, and some people have lower score, and that's gonna negatively affect the rate. So here,
Gotcha.
just in general, what we have a little chart. Or whatever you call it, with what rates could be. So they could range from 300. I've never seen in my 22 years career. I think the lowest I saw is 420 and up to 850. And, also hard to get there. It's hard to get that low and it's hard to get that high up. But honestly, once you're at 780 plus, score bracket, you're gonna get the best interest rate. If there is a mortgage insurance, you're gonna get the lowest premium on that as well. So 780 and above is a sweet spot. 740 to 780 is actually a very good rate scores, and most people, actually a lot of people fall into that category. So that is your target, that's where you want to be. So what actually affects the credit score? 35% effect is your payment history. Obviously, we want to see how you making your payments, how you handling your debt, paying it on time, you have collections, bankruptcies. Those will definitely have a negative effect on your score. So even if you were late on your credit card that has $2 balance on it, that is gonna have a huge 35% impact on your credit score. Another one is very important, is the amount you owe on your credit cards. We call it debt utilization ratio. So basically, we look at the percentage of what your balance is comparing to your limit. Are you maxing out on your credit card or not? So the best is to be at 6 to 10% of the limit.
Oh, wow.
And somebody will say that, well, I use my credit card for points maybe, right? And then I pay it off at the end of the month. So I carry zero balance. So a little trick, if you wait until the day when the payment is due, the credit card company will actually report the balance that you had. But so there is a billing cycle that ends before the payment is due. So you need to know when the credit card reports to the bureau. And you can call them and say, when do you report to the bureau? And make sure that you pay before they report, not at your due date, but before they report. And then they will report zero balance. And obviously that's gonna help to increase your credit score. And when I look at clients' credits and I see that there is potential for them to increase the score because of that debt utilization ratio, and I just recommend them just pay it off or pay it down. Sometimes actually paying it down better than paying it off. And I can run that simulator for them and tell them what they need to do. And it actually improved the score drastically. It's easy to do, unless of course you're not able to pay down to 6 to 10%, because maybe you don't have that much money.
Right.
Another option would be for client to ask to increase their limit. So this way that percentage of balance versus limit is gonna naturally go down.
I have a question for you.
Mhm.
Okay, so I have a credit card that I haven't had a balance on in I don't know how long. And when I was going through, just to check, because I'm like, does this one have an annual fee? But every month I kind of go through and I check everything. And I saw that they lowered my credit limit from like 21.8 to 15.4. So I called them and they said they lowered the limit due to inactivity. Would that show up? Now, I was able to, luckily I caught them in time, and I'm like, no, I want you to please take it back up. And I thought, I'll get gas on it right this month. But would that show negatively on a credit report that they lowered my limit?
Not really, because again, they score you based on your amount owned versus the limit. They
Right.
don't really score you if your limit is low. They don't
Okay.
score you.
But maybe my overall.
Yeah, so do they do it like if you have 5 credit cards and your total credit limit's 100,000, and across those 5 credit cards you've used 25,000, do they say, okay, it's a 25% utilization, or do they do the utilization for each credit card and then average that number? Because if it's a broad number,
that's a very
the
good
rate goes
question.
down.
Exactly.
Yeah.
So they looked at each credit trading.
Got it.
Okay.
That's why, sometimes I have clients with 5 credit cards with small balances on that. on them, and they, in preparation of getting, ready to buy, they think they need to clean everything up. They open new card, they move all the balances into one and close out those five, which they had 5 years history on. So they actually
Yeah.
shoot themselves 3 times in the
Yeah.
because they had five cards, which is good to have more than one, because it's harder to
Yeah.
keep up with five than one. So you get scored on if you have more trade lines and you are organized enough to pay on time. And
Okay.
Okay.
so that's one negative. Then the credit history gets wiped out, right? And the third
Yeah.
one is the debt utilization goes up. So they do look at each trade line separately.
Okay.
Gotcha.
Okay.
Okay. That's why you always talk to your lender before you do
Yes.
anything when you're looking for a mortgage.
Because it doesn't all make obvious
Yeah, it's
sense.
not logical.
Yeah.
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 Okay.
Yeah. Don't
Thank you.
diagnose and don't self-medicate yourself.
That's right.
Right.
That's right.
No Google MD.
Yeah. All right. So another one, the credit history, just like I mentioned in that little story or example, right? So you have longer your credit history, the better, of course. If you have a newer credit history and you're doing everything right, but your score is lower, just give it time because it's new. So you need to have some time for that start going. And then we have 10% effect on new credit. Actually, it would be a negative effect because in the beginning, when you open something new, it's an inquiry and it's some new debt until they see that you using it and you using it right conservatively, then it actually in the long run, it's a plus. It's a good effect on your score.
Okay.
Gotcha.
10% also type of credit in use. They like to see variety. They like to see maybe revolving accounts like credit cards, installments like car loans, student loans, mortgages. So they like to see the healthy mix, so to say, right?
Okay.
So, and just to reiterate, the ways to improve the score: pay your bills on time, get current if you have past due amount, and stay current. Reduce balances on revolving credit cards to 6 to 10%. And the balances are determined by a statement, so you want to make sure you paying it before the statement comes out, before the due date, and you can check with your credit card when they report. Don't open new credit cards that are not needed, especially when we're talking about, like in preparation of getting a mortgage, right? So you don't want to open a card without talking to the consultant first. Increase your limit.
How long is it considered new, Tatiana? Is it like 3 months, 6 months, 12?
Typically it's 6 months.
Okay.
Yeah, so but in general, like even sometimes it's even 1 year. If you don't really need it and but you have it and then it's kind of hurts your debt to income ratio. Yeah. So
Okay.
increase your credit limit when it makes sense, just like I mentioned, right? Like if you cannot pay down, increase the limit, but don't increase the balance.
Yeah.
Right.
Yeah.
Right. Keep the balance down. Don't close the unused cards. Again, back to my story, right? Keep it
Yep.
open. Put it in the freezer if you're afraid you're gonna use it, but just keep it open. Dispute inaccuracy. I recommend a lot of people now check their check their credit scores and kind of follow what's going on in their accounts. Everyone is entitled to one free credit report from each bureau. So I recommend to get reports from each bureau: Equifax, TransUnion, Experian. Why? From all of them, not just one, because not all creditors report to all three credit bureaus.
Mhm.
And if you just checking Equifax, for example, you might not know what's going on in TransUnion and Experian because the creditor might not report to those, and maybe there are some fraudulent activities, and you don't even know that somebody opened a card under your name because they're not reporting to the bureau that you actually following. So to get the full picture, use check the reports on all three bureaus, which you're entitled to.
Okay.
Gotcha.
And of course, use the credit because cash isn't always king. And
That's
I
right.
know there are people that don't like using credit cards. And I get it. The thing is that this is the way when you want to get a mortgage, when you want to get a loan, this is the only way for bank to analyze and see if you're credit worthy, right? And this is the only way to do it. So use it very conservatively. Don't overspend and just use it a little bit, but don't go fill up your car and 5 minutes later pay it off. That's not gonna do any good. Just wait for a billing cycle and then make
Okay.
yeah. So
Okay.
that's
Awesome.
about it.
Okay, one quick question. The 6 to 10% on the balances, if you're an overachiever and you go down to 3%, that could potentially affect your score negatively. Is that what I'm understanding?
I mean, not necessarily. I would say
Okay.
it's, it's safe to pay it off or pay it down to 6 to 10%. It's more like when someone like my client, let's say they have lower credit score, and what did I do? Hold on. Stop sharing. Let's say they have lower credit score, and I run simulator for them to tell them what they need to do to increase their score, right? And the simulator will tell me sometimes that they need to get it down to even $10.
Yeah.
Yeah.
And it's better than to zero. But that's
Okay.
only in case when we really need to improve the score fast and to a certain level. Then, they need to follow directions precisely. But in general, if it's really hard for you to know, do you need to be at zero or $10 or
Yeah.
$11? So if you pay it to zero, you pay it to zero. It's still
Yeah.
gonna
Okay.
be better
Some
than
backdoor
keeping.
algorithm.
Yeah, it's different
Yeah.
algorithms. It's still
Okay.
better than keeping balances over 10%.
Okay.
Okay.
Good.
Awesome. Thank you. That's very helpful.
Yeah. Very good.
You're
Okay.
welcome.
If somebody needs to get in touch with you, how do they find you?
They can call me at 571-245-3000.
All
That's right.
right.
For the
All right.
best loan officer around.
That's right. All right. We'll see you next week.
Bye.
See you guys.